transaction volume, sales volume is down year over year about 65, 70%. And that's in most markets, most metros. I mean, there could be some variance up and down a little bit, but and a lot of that has to do with interest rates naturally. When interest rates double in such a short period of time, it's tough for the market to adjust quickly.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?
Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I am here with Doug Banerjee. Doug is a multifamily investment sales broker in Dallas, Texas, and has been in the industry since 2011. You've got several years of multifamily experience with national real estate firms and a number of other sort of high-level consulting positions. I don't want to sort of read your bio, Doug. Like I said, I want to let you tell your story. But first, I just want to say thanks for coming on the show today, taking the time out. I really appreciate you being here.
Yeah, no, I appreciate you having me, and happy to share a little bit about myself and how I got into the brokerage world. So, starting kind of growing up, my dad was an executive with DuPont, with the chemical company, for 37 years. And my mom was a CPA by trade. So I always kind of grew up around numbers and a little bit of science, right, with my dad being an engineer. So I went to Virginia Tech, went in and got my engineering degree, worked a couple internships in the summer, and decided after graduation I didn't actually want to go the engineering route. So I finished the degree, but I went into IT consulting straight out of school, worked for Accenture and then Deloitte. Did that for about 6.5 years. And one of the big perks of it was I got to travel the world, meet a lot of people, see a lot of places, and that was fun. But the day-to-day work was not really inspiring for me. And so I wanted to find what my passion was, and that ended up being real estate. So in 2011, the year before I was going to turn 30, I promised myself I was going to get into a career that really inspired me and that I could go and learn and not dread going into the office every day. So I made the pivot into commercial real estate then, started at a national firm for a couple of years, and then ultimately made the pivot to Grayscale, where I've been at for a little bit over 10 years now, and founded the Dallas-Fort Worth office in January of 2014 with my old partner, who has since retired from brokerage about 5 years ago. But the team that we started together, we've built out. We've got 10 people in DFW working the market rate side of things. And I wear a few different hats at Grayscale. So I run that market rate team of 10 people that I mentioned. And I also help co-lead our Texas land sales practice and our national affordable housing practice, which are all multifamily, focused teams as well.
Sure. Your background, with your parents, and you said you grew up around numbers and science, so I think some of that fits together, and certainly could lead to going towards a engineering degree. But you never really put that into practice. You kind of pivoted right after graduation and went straight into IT consulting.
I did, and as far as like the particular courses that I took, I didn't put those into practice, but engineers are taught to problem solve, and in
Right.
real estate, there's a lot of problems, right? So I like to look at myself as an advisor first for the clients, right? So naturally, as a broker, I make my money when people sell their assets and I represent them, but sometimes selling the asset is not the best option for a particular client. So I always want to look at all of their options as if I own the asset, and I'm sitting on the same side of the table as them. So you can always hold and do nothing. You can refinance. You can sell. Those are kind of the three high-level options that any owner has at any given time. And then there's subcategories of all those too. So we look at all the options and figure out what's best for them and their investors. And advise them and provide the facts and data to help them make an educated decision.
Yeah, no, I think it's a commercial transaction is a big undertaking, and I think having a good broker to help guide that in I guess maybe this sort of a segue into a question, but in I want for listeners to understand, and I guess maybe I could be a little bit wrong here, but in residential real estate, there's often a seller's broker and a buyer's broker. Sometimes
Sure.
someone's representing both sides, but in commercial, that's at least what I've seen. That's not the case. Typically, the broker is representing the seller. Yes, if they're a good broker, they're helping on the buyer side as well. But typically, you don't have two sort of opposing, if you will, brokers at that that level of transaction. Maybe talk about some of those differences for people that are listening and might be more familiar with residential, but how a commercial transaction works.
Yeah, so I look at residential and then homes and then multifamily being commercial as two completely separate things, right? Because when somebody buys a home, they're typically going to live in it, and there's an emotional attachment to it. When we sell apartment complexes, essentially we're selling businesses, right? So we're selling income streams. So the reason why there's typically not a buy-side agent involved is, yes, we're representing the seller. We have a fiduciary responsibility to them. We're the listing agent. But our job is to go out there and build a market and educate that market on the opportunity. And so no one's going to know more about that opportunity than we are. So there's really typically not a need for a middleman in between that. We want to directly communicate with the different buyers out there, answer their questions directly, make sure that they have the data and the information that they need to make an educated decision on their price and terms that they want to offer, right? So we're presenting with all those things, and so because there's not really that, I would say, the emotional side, it's just more the business, right? And we can get them their answers much faster than, I would say, having somebody else on their side involved. It just kind of clears the playing field a little bit more.
Yeah, no, and I get it. I've seen how it all works and been involved. I just think maybe I think a lot of people maybe just aren't familiar as the differences
Sure.
between a commercial transaction. So you're in DFW, is that, do you focus kind of only on deals? And it's a huge market and a hot market, so I don't think it would be hard to find opportunities there. But do you stay pretty focused there? I know you said you're also sort of wear the hats of some of the national your land brokerage and stuff like that. How do you split your time, and what's your the bulk of what you're doing spent at?
Yeah, so I've been doing this for 12 years, and I lead the team here on the market rate side, which has the 10 individuals. There's 5 of us focused on DFW. So I kind of coined this term actually recently. We're both subject matter experts in multifamily, but also sub-market experts. So everyone on the team has not only the multifamily focus, but also the geographic focus. And so we've got 5 people that are covering, DFW, the Metroplex. And then we've got 2 guys that cover West Texas down through Central Texas, 1 guy who covers Oklahoma, and 2 that cover East Texas, Arkansas, and the western portion of Louisiana. So we are working what I call a 5-hour radius from DFW. So we're doing deals all over the region, but we have specific team members that are sub-market experts, in the different areas that I mentioned. So that's kind of how we break things up. And the market has we're still getting deals done, but there's been challenges for the last 24 months as interest rates have gone up, and they're staying up right now, and everyone's waiting for the Feds to start to make them pull them down and allow that momentum, for transactions to go back up. But we're still getting deals done. We got a lot of loan assumptions done. We've got folks that have bridge debt coming due that their best option is to sell. So we're getting those signed up, and we'll be rolling those out to market here shortly.
Yeah, I actually think that's maybe a good thing to touch on is the difference in what you saw, kind of in the market 2 years ago versus now. Everybody knows, ultimately interest rates went up. That's pretty common knowledge, I think, through media and things like that. But what direct effects do you see as a broker, in terms of transaction volume? Just, how has that been on the on the buyer side, the operator side? I've seen how it is, but I'm sure it's been a big turn for brokers as well. What are you experiencing throughout the time?
Yeah, I mean, across the board, transaction volume, sales volume is down year over year about 65, 70%. And that's in most markets, most metros. I mean, there could be some variance up and down a little bit, but and a lot of that has to do with interest rates naturally. When interest rates double in such a short period of time, it's tough for the market to adjust quickly.
Yep.
On top of that, we've seen insurance climb for the last couple of years. We rarely ever see real estate taxes go down, so those continue to go up. And we've had a lot of supply in DFW in particular. So once again, sub-market specific, you're seeing rents flatten, decline in some areas, or the growth is pretty minimal. So you kind of have a perfect storm of those four things plus others that have kind of gotten NOIs to flatten, and then cap rates naturally have to go up when interest rates go up at the rate that they did. It's not a 1-to-1 ratio. So it doesn't mean that, if deals were trading at, let's just call it 4 to 5 caps before from, Class A, say a 4 cap, some were trading sub 4, and then, Bs and Cs up around 5, and interest rates have gone up 300 basis points, from where they were at the bottom. Cap rates haven't gone up that much, but they've gone up probably 150.
Yeah.
Class A deals are going to trade for the most part between 5, 5.25, maybe 5.5, depending on the market. And then the Bs are still going to be in the mid 5 range, depending on how much upside there is. And we have seen Cs push up above 6 caps, just given there's not equity out there that's willing to step in without that positive leverage going in day one on a Class C property. So we're definitely seeing deals trade north of 6 in the Class C space in DFW.
Yeah. With transaction volume down that much, would you say that is kind of down that much from the norm, or that we were at a elevated, sort of accelerated transaction volume in 2021, first half of 2022, and it's down from that? Or how would you compare it to, I don't know, 2019?
Yeah, it's a good question, actually. I guess in my head, I've been comparing it more to 2022, right? Because that's when things were good until
hot.
Yeah. Yeah, I would definitely say 21 and 22 were probably inflated numbers compared to the norm, maybe by 30%, right? So maybe we're down 50%, 45, 50% from what the norm is compared to the peak, if you will.
Yeah, sure.
And I anticipate, because we're starting to see transactions pick up, there's a lot of bridge debt, like I mentioned, coming due this year, because naturally, if the peak of the market was in 21 and the early part of 22, and there were a lot of buyers putting 3-year bridge debt on, they've got to do something, right? They're either going to buy extensions, refinance, or sell. And a lot of groups are, not a lot, but groups are electing to sell, right? Because if they need to do a cash in, or they need to raise capital to buy a rate cap or exercise their extension, or they don't qualify for their extension, selling's going to be their best option.
Yeah. What do you, I mean, nobody knows what's going to happen, but how do you, if over the next 18, 24 months, what do you think is going to happen? Because one of my big questions, everybody keeps talking about how all of this bridge debt is coming due, and we're up against this like wall of maturing loans, but it's not that easy to actually take advantage of them, right? Because if it's a stabilized deal, then someone likely will refinance into agency debt, find something, and just plan on holding it longer. But if it's not a stabilized deal, and you're whether you're forced to sell, or even worse, give it back to the bank, now someone has to come up with the debt to purchase an unstabilized deal that's going to be, kind of that similar bridge debt product. Or maybe I'm missing something, but like, what do you see kind of how this all will shake out? Not holding you to anything. I'm just very interested in people from all different angles here, what they think.
Yeah, I mean, those are all valid points, right? And the distressed deals that somebody has to go and put expensive debt on, I think we're naturally going to have to see prices reset, and we're seeing that. I mean, we're seeing prices come down have already come down 20 to 40% from where the peak was. Call it Q4 of 21, Q1 of 2022. So it's just, to me, it's the math, right? People want to solve to a certain return, and if you can buy a stabilized 6.5 cap today, well, naturally somebody's going to want to earn a premium, for that sweat equity that they're going to have to put in, and they're going to look at their stabilized return on cost, probably 100 to 150 basis points north of there, and you got to factor in those more expensive carrying costs, et cetera, et cetera. So we're going to see, prices drop in those scenarios.
Yeah, and I guess if they drop to below where the debt stands, then at that point you're talking about having the lenders involved in the sale or foreclosure.
Sure.
Or something like that. So that's been my thing. Is I've just been wondering. I get the point that we're all of these, this bridge debt cycle is coming due, but how do we? It's not as easy to take advantage of that as people tend to talk about, like, oh, everything's going to be on sale, but people are going to do whatever they can to not be in that situation. So it'll be interesting to see what happens over the next 18, 24 months. And if
and I mean, the lenders don't, for the most part, they don't want the assets back, right? So behind the scenes, what we're hearing is there's a lot of potential workouts being negotiated, and not all of them will probably get worked out, but the
Right.
lenders don't want the assets back for the most part, right? So if these buyers can come up, or the owners can come up with more capital and pay down the debt and continue making the debt service payments, we will probably continue to see a number of these deals extend and pretend for 12 months, 24 months, as long as the lenders are willing to work with them.
Yeah, no, I think that makes sense. With, you mentioned earlier the kind of sub-market expertise that you and your team have, and I think it's so important to recognize market versus sub-market when it comes to, probably, I mean, commercial or residential real estate, but commercial real estate, it's, you could be talking about DFW, but DFW is humongous, and you could be talking about a difference of 6 blocks and have a very sort of different product and resident base in that area. And is that kind of, do you each on the team take, kind of, here's my sub-market, or you're just, everybody's familiar with the different breakdown of the cities?
We have kind of our master list of cities and zip codes, and so we've kind of got it broken down that way, so we know who's covering what. So that's kind of how we have it broken down. So it's we try not to be generalists, because even Fort Worth to Dallas, lot of differences, and then there's 20 cities in between, and buyers. There's going to be a buyer for any asset in any location. It's just a matter of pricing and what the risk-adjusted returns look like. So we just kind of make sure that we've got all the areas covered. And naturally, we're looking at AMIs, we're looking at schools and things like that. And so we'll factor those things into, when we're coming up with our pricing, and the lenders will too.
Yeah, that makes a lot of sense. You mentioned when you're telling kind of your background, and you mentioned in your bio here how you wanted to get out of the consulting world because you wanted to not be traveling so much and settle down. I feel like brokers are out there a lot in kind of on the road and doing a lot of touring properties, meeting with buyers, that kind of thing.
Sure.
Has it been what you thought in terms of kind of getting yourself away from the travel load that you had before?
Yeah, absolutely. I mean, I was on the plane every week for 5 years,
Oh, wow.
in my consulting days. So it was fun for the first 2-3 years, and I spent 2 years in Europe, which as a single guy in your 20s, like, can't complain.
Right.
I got to see 25 countries in 2 years, and it didn't cost me a whole lot of money out of my pocket because I was getting per diems and stipends for flights and stuff like that because I couldn't fly back and forth every week. So that was a lot of fun. But yeah, I still travel about once a month on average, going to a conference, going to meet with clients, and of course, just personal stuff. My wife and I took our kids to Steamboat for spring break, and then she and I more recently went on a group trip for fun, right? So we still travel a bit, but it's on my own kind of discretion as opposed to having to do it for work, right? I do it now because, of course, it's what I need to do and what I want to do for my business or
Yeah.
personal.
Yeah. Well, yeah, and I mean, personal travel is a whole different. That's just fun. That's a
Sure.
totally different aspect there. But no, that's very cool. Well, let me ask you the questions that I ask every guest. The first one's
Okay.
always based on the name of the show being Know Your Why. What is your why? What's driving you? You've had a pretty unique and diversified background, and now we're from a real estate perspective. You've now seen quite a big shift in the market. What keeps driving you forward?
Yeah, I mean, I would say this kind of sounds bad when I think about this question, but up until the age of 21, I had never left the country. I grew up in the Midwest, lived in 8 states because, like I mentioned, my dad worked for DuPont and he worked his way up that corporate ladder. And so I did a lot of moving in my early childhood years, and didn't really know what my why was. I don't think many adolescents, probably do. And then I studied abroad as a junior in college and went to Australia and Fiji and New Zealand, and it really opened up my eyes to the rest of the world. And it's become a really big passion of mine. I just got back from the Dominican Republic on Sunday, first time there, and it was great. It was a tropical island, a lot of fun. We were there with a group of entrepreneurs on a chapter retreat. So we had a lot of fun, and that's the 42nd country that I've been to. And I'll be turning 42 this summer. So it's one of my passions. I would say it's partially my why, is to just go out and explore and see new things, new places, meet new people. And one of my goals in life is that whatever age I am when I die, I want to have visited more countries than that age. So if I'm 80, if I'm fortunate enough to make it to 80 or longer, I want to have been to 81 countries or more.
Yeah, that's amazing. Did you kite surf?
I did not kite surf. So, we kept it pretty simple and just hung out. And in addition to the traveling, now, I've been married it'll be 9 years this summer. I've been with my wife for a little, I guess, over 11 years. So And we have two kids, a daughter, Catalina, who's 6 years old, going on 7, and my son, Luca, turns 5 next month. So naturally, as you get older, you build a family. I mean, my purpose is to go out, provide for them, and allow them, my children and my wife, more experiences or the same experiences, right, that I'm having, but ideally more experiences than I had as a childhood. I have no complaints about how I was brought up. My parents did a fantastic job and provided well, but I want to be able to provide more, right? And for me, providing more means getting out to see the world and experience things outside of. I love Dallas, Texas, where we're at. I don't necessarily want to live anywhere else, but I do like to go places and see how other cultures live life and experience that.
Yeah, oh, that's amazing. That's amazing, and letting your kids see that too is just they'll that's stuff that they'll remember for life. So that's pretty cool to have those experiences. Tell us something about yourself that maybe isn't common knowledge, special skill, a hobby, something to let people know you a little better.
I mean, most people who know me know this about me. I'm an avid sports fan. I mentioned my son's name's Luca. He's about to be 5 years old. I have season tickets to the Mavs. And after Luka Doncic's rookie season, my wife was pregnant, and we were looking for a name to name our son. And we picked a list of top 10 names for males in Eastern Europe because my wife is originally from Romania. So we wanted the name to have some ties to the region, but something that was easy to say and spell. And here Luka Doncic came along. So we named our son Luka, and he's become a big fan as well. And I'm excited because my daughter, who's the oldest, she's seemed to really start to enjoy sports. She's playing soccer and basketball and swimming. So she's trying out a lot of new things. And Luka, he's dabbled. We'll see if he ends up being a sports enthusiast as well. But that's one of my passions and one of the things I love to do.
Yeah, no, me too. I think the it's a funny thing as a parent. My kids are a little. My son's 5, but my daughter's coming up on 3, and so my son is also like at that point where he's like, there's things, like he's had a session of soccer. He's had he's actually just started with baseball this, I don't know, a couple weeks ago and stuff. And so it's funny to see because I, like yourself, like I'm a huge sports fan, and it's really exciting and like meaningful to me to think of my kids also being into sports and like going to their games and like cheering them and all. And then I'm like, what if they don't want to? Like what like what, because I actually see like probably, at least right now, I feel like my daughter is going to be more I don't know, sports oriented than my son. Like my son's like the creative intellect type. I'm sure he likes watching things sometimes or whatnot, but it's an interesting thing to think about because it's been a huge part of my life always, like from childhood and now. And then you have young kids and you're like, well, I think almost in my head I assumed they would play sports, and then it's like when it happens, you're like, well, maybe they don't like this one, or maybe they don't play the sports I played, or whatever. It's just an interesting thing to start to shift that perspective of what's important, like where that focus should be. So it's funny that you mentioned that.
Yeah.
When people hear this and they want to reach out to you, what's the best way?
I would say LinkedIn. I'm pretty active on there. This is a fun fact. I'm the only Doug Banerjee in the world. So I'm pretty easy to find, from that perspective. So the last name Banerjee, it originates from India, dot, on the head. So my grandfather came here. He was probably one of the first immigrants from India, because he came here in the late 40s, early 50s, went to Cornell to get his graduate degree. And so I'm a quarter Indian. My dad is half Indian, and my dad's mother immigrated here. They met at Cornell from Poland. So my dad's half Polish and half Indian. So I'm a quarter of each. And a lot of Indian clients or Indian ethnicity folks that I've met always kind of look at me funny because I'm a 6'3" white guy with a very recognizable Indian last name. So
That's amazing. That's what it's another thing we have. I'm about 100% sure there's no other Jason Balara either. And I think every Balara is in my family because it was something Spanish that was changed like generations back. And I don't know as much of the story as you do about yours, but like it was basically, it just wasn't there. If you're not related to me, I don't think anybody has that name. And like, we don't actually have a huge family. Like I have a brother, we each have 2 kids. Like there's not a lot beyond that. Like we have some aunts and uncles, but it's really not, there's not a lot of us. So it's funny that you mentioned that. So should we share that fun fact? I'm fairly certain you won't find another person with my name either. So interesting.
Okay.
My last question for you, Doug, if you were to speak to someone who wants to get started in real estate, and you can take this in the direction of if they want to become a broker or someone who's looking to, purchase commercial real estate, how would you suggest they get started? And I mean, feel free to answer both if you have thoughts on both. I'm just advice to someone, kind of starting out.
Yeah. So naturally, the question, it kind of depends on who the audience is, but when you ask the question, I think about an opportunity that I had about a year and a half ago. I've become friends with one of the assistant ADs over at SMU, and she invited me to come speak to student athletes at SMU about commercial real estate, not just specifically about brokerage, but naturally I kind of got into it a little bit more with them and explained to them what I do in commercial real estate. But there's also property management. There's the lending side of the business. There's the principal side of the business, development side. So the best advice is to go out there and get some experience, ideally as an analyst, because as an analyst, you're going to get a lot of reps and opportunities to underwrite deals and research things. That's the best way, no matter what path you're going to go, that's going to build a really solid foundation. So for us, we've hired a lot of analysts who, in some cases, they'll become producers or brokers if they want to kind of go the 1099 route, which is what we are. And, I say the sky's the limit, but the floor is zero. So you really kind of have to understand and bet on yourself to kind of go that route. Otherwise, there's nothing wrong, right, with going into property management, the lending side, development side. There's career paths and those opportunities, and a lot of those are entrepreneurial as well, or you can get W-2 jobs that kind of follow a more consistent path of growth. But I think just being an analyst, getting some sort of underwriting and analytical skills is where I would start. I didn't have that luxury. When I was 29, I kind of skipped that and just taught myself and dove in straight away because I was that motivated to just switch careers and do something where I could bet on myself. And fortunately, the bet worked out.
Yeah, for sure. That's a great advice. I've never had anyone sort of mention that, but I think that's a very smart, because if you don't know the numbers, if you don't know how the numbers work, whether you're selling, you're a broker, you're selling, or you're buying as a sponsor, like you've got to know how the numbers work. And I think it's dangerous even as a principal to like have someone else who's your underwriter and like not really know the numbers well, because you've got to be able to look at it and say, does this make sense? And then can I execute on it? Can I make this business plan come true? So that's actually a very unique answer to that question. And I love it. I think I've talked a lot about the apprenticeship model for mentoring. A lot of people do paid mentorships and things like that, but like, especially if you're a young person, or you're having this discussion with student athletes or just students in general, like looking to get into this space, like find a job with someone like yourself, someone who's doing it, and get into the business somehow. And you'll just learn so much so quickly that way, without being, you know, without immediately having to bet everything on yourself and be, kind of, commission only or whatever. And then you can move to that once you build a little confidence and knowledge in the space. So I think it's perfect idea for people starting out. So
Yeah,
awesome.
and there's a course, and I believe you don't have to be in person, but it's taught by a couple of I think one SMU professor and another gentleman who's in the industry, but it's called CRE analyst. So it all
Mhm.
ties back to the analyst
Right.
things, and we've had a number of folks here in our office take it, and I've met with one of the teachers at that course, and I think they've done a phenomenal job building a network and getting people the right foundation, no matter what commercial real estate path they want to go down. And I'm sure there's other programs like that. I got my CCIM designation about 10 years ago. That's very broad, so it kind of teaches you about sales and underwriting and leasing and market dynamics and stuff like that too. And that was beneficial as well.
Yeah, that's awesome. That's awesome. Well, this has been great, Doug. Thank you so much for coming on today, taking the time out, and sharing everything with you did. I think it's been some really excellent pieces of advice for people that are listening, and some insider knowledge to the markets that we're dealing with right now. So thank you.
Thanks for having me. Enjoyed it.
And folks listening, know you're going to love this episode. Please like, rate, and review the show so we can get more great guests like Doug. And thank you all for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?